Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show with Peter Pasternack on real estate investing after starring on Flip This House. I'm Dan Breslin, host of the REI Diamond Show. Today I have the pleasure and opportunity of bringing you one of A&E's Flip This House stars, Peter Pasternack from Atlanta, Georgia. Peter and I are going to discuss a range of real estate investing topics, including building million-dollar custom homes and a forecast on a possible coming real estate pricing correction you'll definitely want to tune in for. If you are enjoying the REI Diamond Show, I am going to shamelessly ask you to go on iTunes and leave a positive review. It does help us with ratings and gives us the opportunity to reach a larger audience. As always, there's no BS sales pitch or products being offered on this or any episode, just real money-making real estate investment knowledge and wisdom so you can relax and enjoy the show. And welcome to the show, Mr. Peter Pasternack.
Hey, thank you so much for having me on the show today.
Absolutely. Our pleasure here. We're excited to have you on. I was excited, looking forward to this episode. I hear a lot of great things about you, what you've done. I'm sure that many of our listeners are going to recognize the name from your presence on A&E's, TV show a few years back. And I, know from mutual friends of ours, you're doing some really great things in the Atlanta market. But why don't you, for the listeners who may not know who you are, just give a little bit of a background on who you are, what you've done, and kind of what your business looks like today, Peter.
Sure. Thank you for the opportunity. So a little bit about myself is, I describe myself as an entrepreneur. My kind of educational background, I have an undergrad and master's in accounting. I'm a CPA and started my work career at Price Waterhouse. I always say that 30 some odd years ago, I had 4 times this amount of energy, and a little cubbyhole at Price Waterhouse was not a great fit for me. But it was a great background. Moving forward, I went into the banking arena, and for 20 years, I was a commercial lender and got the opportunity to finance over 500 companies, which really showed me why businesses, some made money, some didn't. 2004, I got in touch with my entrepreneurial side, bought a printing company, bought 6 companies within a year, all with vertical integration. And then 2005, my current business partner and best friend, Brian Troe, was my personal trainer. And Brian's like a younger brother to me. And one day I said to Brian, what do you want to do when you grow up? And he said, real estate. And so we started as investors. And, at that time I thought I'm going to work 2 or 3 hours a week because I owned 7 companies at the time. And within a year, we ended up on national television on A&E's Flip This House. The first season, we were shown as the investors. It was our house. And then at the end of the season, the network reached out and wanted Brian and I to be the lead characters. So for 3 seasons, we were the lead characters from Atlanta Featured. Kind of changed things when you're on national television, your company, your bio, or around the A&E website. So needless to say, I started to do that with Brian and sold my other businesses. Like everybody else, when the market changed, we had to change and tweak our business model. We were still investors, but we also, Brian got licensed, and we're general licensed contractors and builders. And our current business model is, in addition to investing, we do builds and high-end renovations, everything from homeowners who purchase their homes. If they need, they're in the right zip code but not the right house, we can transform it into a dream home all the way to new construction. So that's what our current business model is.
So are you making more money doing real estate builds, as you are the spec investor now these days, or are you kind of 50-50 with doing work for retail clients who are then hiring you as kind of the builder? I mean, can you just talk about kind of the business mix today of what's profitable for you?
So they're both profitable. It's probably half and half. Half are people who buy homes, and we don't do really any cosmetic. I mean, the type of jobs that we're doing on the retail side are people that need maybe the rooftop off, additional space, total remodels, structural. That's probably half of our business. And the other half deal with still investing and flipping and being part of, whether it's just Brian and I or doing joint ventures with a couple other investors that we do quite a few deals with. So it's probably at this point half and half.
To give us an idea of how much stuff is going on, I mean, how many deals are you doing in a particular time frame? A month, a year? How many projects may be going on right now? And what does the team look like surrounding you to get all that done?
So I would say that right now we're doing probably about 20 deals a year. You know, the average time to do the renovations and the builds are probably a 6 to 10 month period for each project, because they're, like I said, I mean, they're major renovations all the way to new builds. Brian and I, of course, Brian handles everything on the construction side. So anything that happens there is him. Everything off the construction side is mine, which is, running the business, networking, going out and getting the sales, and then I handle it over to Brian. We have a couple project managers that report to Brian. So, when we first started, like, Brian was the one who did a lot of the work on our project. I teased Brian, I'm not sure if he would know how to get a hammer and nail anymore in his hands, but he does a great job coordinating the project managers to make sure that the projects are being done both, efficiently and are within budget.
Can you give me an example of maybe like deal price points? So I'll give you an example. My stuff that I do, at least in the Philadelphia market, where my main primary fix and flip business is located, and we probably do anywhere from 10 to 15 deals, flips per year. But we generally stay in an area where, like, maybe the after repair values are in the 200 to like mid 300 range. Can you give me an example of maybe like the deals and what they look like? Because if it's a 6 to 12 month project, you're talking about second story additions. I imagine that you're probably in a little bit of a pricier area or price point than where I'm operating.
We are. So let me tell you what we started. So if people know from the show, my business model when we first started was we would be all in, which included the purchase price plus the rehabs at about $175. And those houses were going on between $275 and $300. But here in Atlanta, those type of deals are much harder to find. The reason is, as an investor, basically, you're looking to buy things at a wholesale price so that you can then make improvements and make a profit margin. But a lot of those areas the homeowners are in, and so it's harder to find. So most of the deals we do now, we're buying properties, whether it's a tear down or whatever, in the $350 to $450 range. We're typically putting, $250 to $350 in. Most of those are going on the market from $1 million to about $1.2.
Wow. So you're finding somewhere in the neighborhood of 20 of these deals per year. How do you come across these, Peter? Do you do this on the MLS, or are these just strictly networking, wholesalers?
So it's a combination. I've always had the belief that when you're building a team, you have to know what you're good at. And, I've taken some classes where people are like, as an investor, you should never use realtors. And I don't believe that. I've always used realtors because at the end of the day, I want to spend my time and maximize my own money and my team's strengths. So it's kind of a combination of using realtors. But the thing is, most people know Brian and I from being on TV. I'm pretty well connected here in the Atlanta market. So we have a lot of off-market deals that come our way. And people, since they know we're buying and doing so many different projects, that say, hey, we've got something coming up. We did a deal over in Morningside, which is a really nice area here in Atlanta. We had our signs up, and 3 houses down, the people came up and said, would you be interested in buying our house? And so that happens, too, is when we're working in certain neighborhoods, people will come up and, there's nothing better when somebody's coming to you and wants to know if you're interested in their property.
You're in a price point $1 million, give or take, let's say, on the after repair. And you, like myself, I started in 2006, and I believe it was 2005 or so when you came on the scene, right, Peter?
2005.
So you've seen the market change, and you've been in the Atlanta area when that took place. Are you worried about the price point that you're at, or do you have any kind of like mitigation for the risk of, the market softening, or could you just kind of give some insight on how you approach the risk involved in that deal, in those type of deals?
Sure. So like any good business person, you have to know your demographics and your demand and supply. So the areas that we are in are highly sought after. They're in the great best school systems. I mean, a lot of people, even if they're outside of Atlanta, have heard of Buckhead. So several of those properties are in Buckhead, and a lot of them are in the Sarah Smith School District. And so one of the things that's a little bit different here is for a lot of families, one of their biggest expenses is having to send their kids to private schools because a lot of the public school systems here are not what families want. So these school systems that we're going into are great and are sought after because a lot of the families don't have to send their kids to private schools. A lot of times that's $20,000 to $25,000 a child a year here. So we're making sure we're in the right areas. And here's the thing, for these projects that were in the million, we might be all in $750. And so if we needed to get out, if we had to reduce the price and reduce our profit margins, we would not have a problem. And, we've been doing this enough in the last 12 to 24 months to prove our model that it has worked and been very profitable.
Was it that 12 to 24 month period? Is that when this investment philosophy decision and change to go after this higher price point with larger construction and lower barriers to entry, as in, every Tom, Dick, and Harry investor like myself chasing these $300,000 properties? Was it that 12 to 24 months? Is that when the decision happened? And what drove you to that revelation, or what new piece of information, caused you to say, hey, wait a minute, here's an opportunity. We're going to now focus on this sector in the higher price point?
So you're exactly right. Like I said, when you tell me what your business model was, that's how we started in that, all in 175 and, in that 275 to 300 after repaired value and sales price. But those deals are very difficult to come by. And so if you're an investor and you're looking to do 10, 15, 20, 25 deals a year, it's very challenging. And so when we took a look at the ability of, okay, where are we going to make money, what's available, we realized that a lot of people, because of that price point, it'd be a lot more challenging for them to get in. And so the demographics, it's funny, a lot of the nice areas of Atlanta, you have a lot of these older homes that, those brick ranches in the 1950s and 60s that lead themselves to either being total tear downs with new builds, or in certain areas that, a nice renovation can be put in that now would fit the families that are living in those areas. And so for us, it was just an analysis of, how many homes were available. And during that time when we realized how hard it was to get some of those other investment properties, the nice thing about our business mix was we still had a lot of the retail side with families, especially when the inventory levels got very low here and families were having trouble finding homes, that I would teach a lot of classes, find the right zip code, let us renovate or build your home that will make it the dream home. So if you never want all your eggs in one basket, and so the ability to go back to either the investment side and or the retail have really helped us in the market.
So that's that 50-50 business model that we talked about right in the beginning of our episode here, where you're doing these retail renovations.
Correct.
So that's, in a sense, that's a bit of a risk hedging company operation that you have in place there. That's brilliant. That's brilliant.
Yeah, because then you're not having to worry about the market and taking the risk of the sales and stuff like that. The people already have the homes, and being a former banker, I know a lot of the bank products, the renovation products, and, one of the things we're able to do when we're talking to homeowners, and, a lot of people don't realize that there are renovation loan products that the banks have that will finance that, and, putting that together sometimes they realize they can do a little bit more than they thought they could even afford because they thought they were going to have to pay cash for all these renovations. So that's helped us also.
What would be, and I understand if you don't want to answer the question, but what would be like the profit? Are you looking at like a 10% profit? Do you make a little bit more of a profit when you're doing this retail renovation to make it worth your while?
So, the average GC, which is general contractor markup, is going to be in about the 18% range. And so it's going to be, higher or lower, just kind of depending on the area. Now, one of the things that also helps us is because of the number of projects that we've done, I think our cost structure and pricing from our vendors, from our building supplies and, a lot of our mechanicals, which are HVAC, plumbing, and electrical, our costing structure is lower than most because it's just like a volume discount. So that's been, all those years that Brian and I talk about, gosh, if we knew back in 2005 all the stuff we know now, we would have saved a lot of money, but it was tuition paid, and a lot of that is, bearing fruit now.
We have these $1 million homes again. I want to return to that and just pick that case study apart a little bit further. Can you give me an example of like the actual demographic or, somebody who's buying that? Are they paying with cash? Are they using financing? Are they putting 10%, 20% down? Or have there been Mickey Mouse loans starting to pop up on the scene for buyers who are moving into your properties once complete?
So it's a combination. There are a few that are cash buyers. Typically the ones who fall into that category are people who are moving from California or New York or, Boston area where real estate is extremely expensive, and a lot of times when they move down here, they can't believe how much house they can get for that. So that would fall into the cash side. For the rest of the people, if they're financing and doing new construction, tear down and new construction, they're having to get like construction to perm loans, which is a loan product for the newer construction. Typically with that, you've got to put 20% down. And the same thing, if you're over $417,000, you've got your jumbo loans, and so you typically have to put 15 or 20% down with that. So, there's so many different types of loan products. Luckily, I've got a lot of contacts in there and can give them several people to talk to. But, most of the people are financing it, but again, there are probably maybe 20% that are cash.
Well, let me ask you this question first. How do you finance a spec-built house? Are you doing that with all cash? Do they have good bank financing for investors building new construction? A combination of both or some other means?
It's a combination. A couple of the people we do joint ventures with, we put together a little bit of a hedge fund. And so we've got cash, and a lot of times what we're doing with regular banks is programs where maybe we're buying the house for cash and then financing the renovation, or sometimes it's the other way around, but for the investors, it's much better if the investors don't put their money into the renovations, because during that time you're doing your permitting and different things, so your return on investment is better if you're using the investor funds for the renovation and using financing to purchase the properties.
So in Philadelphia, I had this perspective shift myself. I originally lived in Philadelphia, as many of our listeners know, and then I moved to Chicago about 2 years ago so I could be a father to my daughter, while she was still in school and we could still hang out while I had the opportunity. And in Philadelphia, there's a bit of a new construction building boom taking place right now. And I just assumed, this is how we're going to finance, all the new construction. And the essence of, I believe, a big part of driving it is the government has done tax abatements, but another part is how do you finance all this new construction? And in Philadelphia, there are a lot of banks who are jumping in, and if you buy that lot, they'll finance 100% of the construction. And so we have like entire neighborhoods that have gentrified as a result of those programs going on in Philadelphia. And when I came to Chicago and I looked around for the same programs, I'm calling bank after bank after bank. And I'm sure maybe after this episode goes live, somebody will call and say, oh, yeah, we got that exact program, and give me a call, and please do if you're listening. So we had a huge amount of supply of new construction taking place still in Philadelphia, and we have a moderate but still pretty strong new construction market here in Chicago, but it's mostly taking place at a different price point, where Philadelphia is $350,000, $400,000, even $300,000 for a new house. Chicago's new construction that I see is usually in that $1 million area. What insight could you give me on the Atlanta market as far as maybe those like supply and demand mechanisms? And are there things that you're doing to like keep your finger on a pulse of new construction supply that might impact if all of a sudden there's this large amount of humongous developments that come online? Obviously, that could be a problem if the market starts to slow and supply shoots up.
Great. It's a great question. So one of the things that I'm able to project is we always get the information about how many building permits have been reached and applied for, because needless to say, if you're going to do new construction, you got to get your building permits. And so you typically can project out for 12 to 18 months what the new construction supply is going to be based on the counties once you have that type of information. Now, like when you're talking about the financing, so there are two things that can happen here. So there's still a lot of banks that are giving lines of credit to builders like us or other people, so that if you're doing that type of financing, great. But then if you've got on the retail side, a lot of times the loan product for new construction for most banks is called construction to perm. So a lot of times what you're doing is you're going ahead and you're buying the lot or where you're going to demo. If you buy that for like cash or you've got equity in that, they will use that equity as considered your down payment for what the renovation piece is going to be. So for most of the construction perm here, it's a 20% down payment. So if you buy the lot for, $250 or $300 and you've got that, and a lot of people pay cash for that, then that can be used as your equity piece for when the loan is converted over. And so a lot of times you get 100% of the renovation piece because of the equity you have in the lot or the home. So that's how they do that. But one of the things we are always checking is, new permits to make sure we have a feel for what's going on. But here's the thing. I know the demographics in these areas. We're riding around and know where signs are up and who's doing what, especially in the areas. You always have to be an expert in the area you're going to be so you know what's going on. And so you want to pick an area or two or, maybe three that if somebody asks you a question, you know what the prices are, you know what the issues are, so that you have a leg up on, other investors or people in the market.
Where would listeners be able to find in Atlanta, or maybe there's an easy way to find this, but where can I start to look for building permits being issued? Is there like a centralized location, or is there a publication you can subscribe to get that information on a regular basis?
You have to go, it's a county by county. And like here in Atlanta, you have to go to get your permits in the county. And you can go down, you have to go down to the counties themselves to get that information of what's been pulled. I've never really seen it in like a publication with that, but the county, you can go and get the information there.
And how often do you personally or somebody on your team go down and get that information for you to feel comfortable that you have your nice?
And again, most of the time I have a feel for what that looks like because, even though I don't do much on the construction side, my business partner does that. I always say my favorite color is green, cash green, just like most investors and people out there. And so I understand the ability to make sure I'm aware of what's going on in each county, in each neighborhood, in each location that we're buying, that I know what's going on. So most of the time it's more of a validation of what I believe to be true from the city.
So I'm going to continue on with my example that I used a minute ago with Philadelphia and a lot of the infill construction. So if you're not familiar, Philadelphia has row houses for the most part. Probably 90% of the inventory in the city is attached to the house on the left and the house on the right. And as the neighborhoods changed in the 60s and 70s and people just moved out, left the houses, riots took place, etc., a lot of the houses fell apart and were eventually torn down. And so we have that building boom taking place in like an infill construction. So people are buying the older inventory that's on the left and right still standing. They're renovating that stuff, selling that. And then people are buying and building new construction, which sells for maybe 15% or so more than the older existing inventory that's also renovated in those areas. But I'm going to call that, a constrained market in Philadelphia because it's pretty difficult. Although you'll find like an industrial area, same thing with Chicago. You may find like an industrial 6-acre parcel where you tear down, or even an acre is going to give you many building lots in these constrained areas. There's not a lot of land. You're not able to buy farms. You're not able to find, large subdivisions for the most part where you can build a large number of houses and significantly impact the supply. So you'll see a lot of this one off, two off. This, someone's building 3 houses on 3 side-by-side parcels that happen to come up. And that's what I would kind of refer to as a constrained market. And then I was just pulling comps last night on a property in the Atlanta market, and my mentor years ago taught me that Atlanta was more of a commodity feel, as in it's easier to get building permits and there's still a large supply of land. You don't have as many physical boundaries like the lake here in Chicago, the ocean completely surrounding, California on one side, which is kind of a natural boundary. There's no way you're ever going to see an additional large amount of development to impact supply when you have like natural boundaries like rivers that cut Philadelphia in half basically, and really kind of like put a little bit of pressure on prices for the fact that there's not a lot of land there. And when I take those two, the constrained versus the commodity, and I ask you, Peter, I say, okay, let's take Buckhead. Is Buckhead going to be more of a constrained market, and there's not going to be like large parcels that are going to be whacked up and, all of a sudden there's 60 new construction $1 million homes coming on by Toll Brothers? Or is there still that kind of markets out there, and have you given consideration to it because of lack of supply of buildable land opportunities? Is that one of the reasons why a Buckhead or similar kind of neighborhood is attractive to somebody like you?
So in Buckhead and what I call in-town, and in-town is really inside the perimeter here, which is your Buckhead, your Morningside, your Virginia Highlands, the areas there is not anywhere that there are large parcels that you could build 50 or 60 homes. Most of it, land is scarce. Sometimes you're lucky if you can get 2 or 3 homes, and a lot of times then you're having to subdivide some property if it's big enough. But that's really one of the reasons why the cost from Atlanta standards is higher than others, because land is scarce in those areas. And so more people want houses there than, other areas. Now, if you go outside the perimeter to certain, what we call outside the perimeter, then you can find more land and places that you can build, 20, 30, 40 homes. But most of the time your pricing there, and a lot of times when you're in those areas, is in the, 175 to 300 range, just depending on how far out and where you're going. And a lot of times those are bigger homes and more cookie cutters. Now, one of the other things I think that we do really well is none of the homes that we're building are cookie cutters. They're all custom built with, extra niceties that set us apart. I mean, I would not consider us big builders like a John Whelan here or, Brock or some of the other, that it's more cookie cutter subdivisions. All of our houses have a lot of character and different things to go along with the area.
What would be the square footage on the houses that you deliver, these custom homes, just to give people an idea? $1 million buys.
Most of those are going to be in the 3,000 to 4,000 square feet. Some will have basements, some won't, and it depends on the topography of the lot and where we're going with that. But, average size is probably 3,200 to 3,500 square feet.
Got it. And it seems to me, like I mentioned, and I kind of lost my train of thought. I was comping the deal in Atlanta. I don't recall which town it was actually in, but it was strange. We're buying a house that was built in 2008, 2007, and when you go on Google Earth and you look at it, there's 2 houses that show up on the whole block. The rest of it is developed lots with sewer and water caps sticking out of the ground and weeds and trees, uncleared lots, but they're developed with sidewalks and infrastructure for the streets. Now, when you go on to the MLS and you actually pull the comps in that neighborhood, you'll see the rest of the entire development is, probably 90% built out and sold over 2015, 2016. So you're starting to see that supply and dynamic kind of change. And I'm blown away, Peter. We're talking maybe 15, 16, 1,700 square foot new houses, and they're selling and being offered on the market right now for like 165, 170 for new construction. I mean, to me, it just seems wild that you can buy that big of a house, in the Atlanta market, I don't know how great the school district is or anything like that, but it seems like the cost for the amount of house, like you'd mentioned earlier, is just mind-blowing compared to some of the other markets that I personally operate in.
And the reason why, like in 2007, 2008, like you were talking about, is that's when a lot of builders, went belly up and bankrupt and, did not finish. And so a lot of times you had lots that were developed, but then there was no money to build as it dried. And so as the market has turned around here, a lot of those places, people have bought them and redone them. And so a lot of those are getting finished now. But from like 2007 to probably 2013, during that period, you could go around in a lot of different areas here in the city and see projects that had been started but, never got finished.
My perception is that Atlanta is a hot market and there's probably underlying fundamentals. Do you know any of the reasons, or could you tell me why Atlanta is, maybe it's the demographics, things of that nature, but why is it such a growing city compared to some of the other areas of the country?
So let's start about one of the main reasons. I was just listening to something last week, is Atlanta is starting to get a lot of the movie industry coming out here because of the tax structure. I think Georgia's number 3 in the country right now for television and movies being produced here. And so there's a huge influx of people. They've actually, our different universities and schools are starting to offer programs to teach people how to get different jobs in that industry. So that's one part of it. The second is you're also starting to see a lot of bigger companies move their headquarters here. So like I live here in Sandy Springs. So within about a mile from where I live, you now have one of the largest car manufacturers moving their home base here. And of course, you've got this being the home to Delta. And so our transit system, everybody always teases if you're going to fly, you're going to end up somewhere here in Atlanta. Our airport and a lot of companies, and including now the television and movie industries coming here, there's just a lot more people. And again, then you get to supply and demand. And so, the numbers are pretty great for the future of the state and our city.
Well said. Some of the same things I've heard as well there. People are moving there, obviously, if there's jobs taking place and somebody's got to fill the role. Do you think the market is somewhat overhyped right now? Do you think it's a good time to be buying and holding? Do you think that Atlanta still has some room to go up, Peter?
So here's what I would say. And for people who are investors out there, because I get the opportunity to speak about real estate investing, especially here, is you have to understand both flipping and buy and holds, because there are times where the market is better for flips, and then there are times it's better when it's buy and holds. And, in 2010, this place was incredible for buy and holds. You could find properties for $25,000 and $30,000, put 10 or 15 in, be in that 40 to 50 range, and they were renting for $1,000 to $1,200 bucks. So we had an influx of foreign and out-of-state investors and hedge funds come in here that it was incredible. If you take a look at the statistics, a lot of people feel that in the third or fourth quarter of 2017 that there's going to be a slight adjustment to pricing. Nothing like it was back in 2010 or 11, but I think pricing is not going to be at the same appreciation. But I always tell people, you have to know your areas, because even when we use here in just the state and you use numbers, there's certain places when things went bad that still did not decline. They just didn't go up as much, and some that went down significantly. So it's not just good enough to know what's happening in the state, and sometimes even in the county. It's, sometimes neighborhood by neighborhood. One of the things, I grew up in Connecticut, and I've been here for 30 plus years, but one of the things that surprised me about the market here in Atlanta is you could be on the same street on a different side, and you're in a different county, a different school system, and the value of a property is 50 to 75 to 100,000 are different just because you're on the different side of the street. So you have to really understand that, especially if you're trying to do comps within a mile or two. A lot of times that may not be good enough because, again, county changes, school system changes on the same street.
Yeah, and I think for people who listen to my show here and who know me personally, see me operating in one of the markets, and I would say that I am nowhere near as great as you are at knowing your micro market and the specific little niches. Just from the way that you talk about it, I know that because I'm operating in Florida, Atlanta, Philadelphia, Chicago, I have to kind of pick and choose my battles, and my philosophy is to do my best to dial in the numbers as fast as possible and then pull the trigger and put the deal together. However, I know that there is a lot of benefit to approaching the business on more of a quality versus quantity perspective, and I think I'm a quantity guy as opposed to quality, and what you're describing as being like I'm looking for very high quality deals, and I want to select the absolute best winners with the lowest amount of risk. And I'd like to just highlight that for listeners on the show to say, hey, look, here's kind of two ways to approach it. My way is not necessarily the best way, and what Peter's talking about here on the show is like dynamite information if you're listening.
I say it a different way. There's more than one way to get to Atlanta, right? There's all these different ways you can make money, and there's not a right or wrong. You have to figure out what your niche is going to be and then do it really well.
Great point. So our mutual friend, Austin Stack, I actually met him at one of my real estate investor networking groups, and I'm a huge fan, Peter, myself. We call it the Ring Meeting. We have one in Atlanta just starting up. We have one in Chicago that meets once a month. And we have one in Philadelphia that meets once a month. And I know from my own personal experience that I met some of the real players and some really giving, people who helped me out getting started, who are still my partners to this day. And Austin Stack walked into my Chicago meeting maybe about a year ago, and we first met, and he was getting started, and he was pumped. And the next thing you know, he moves to Atlanta. And I believe he might have met you at a similar networking event. And I'm kind of like building up with this story just to have people on the line. Like if you're not doing this networking, there's a huge opportunity to like meet people, expand your business, meet contractors, bring value to people in the room and vice versa. And I just kind of wanted to like lead in with that's how you and I connected and got on the show was through Austin. And I really appreciate him doing that. And I appreciate you putting that forum out there in the Atlanta market and kind of rolling out the welcome mat to people who are just getting started, people who are players in the game. And I believe that you run a networking event, and I'm going to ask you to talk about that better than I just did.
Well, you did a great job. I say this, if you like to make money and you want to be successful, you've got to be out there and network. The more people you know, the more people you can connect. It's like you got to get more hits. You got to get more deals. And so 6 years ago, I created with my business partner, Brian Troe, our network event called Real Estate Connections, ATL. It is a monthly networking event the first Thursday of every month. When I started this, I actually went to people in the real estate community. I said, look, what's it going to take for you to want to come to my networking event? And I heard many different things, and some people said, I don't know if it's going to work. But my idea was I wanted a networking event that revolved around real estate, that everybody there either touched a home or provided services to a home. And so with that, I created it. This past month, we celebrated our 6-year anniversary. I'm happy to say we have not missed a single month for a 6-year period, which every time I say that, I'm afraid the winter's going to come and I'm going to get like an ice storm and I'm going to miss a month. But last month we had 450 people. We average over 300 people, and everybody there, like I said, is involved. So there are realtors, there are investors, there's money people for regular on the retail side and money for investors, contractors. And so if you're trying to be involved in this world and you're trying to make sure you have the right general contractor, you have the right electrician, the plumber, you've got the right money for your deal, you want to make sure you have a realtor either on the retail side or a realtor that deals and knows how to help investors, everybody in the one place. And so it's like a mastermind group for many different people. And I always say it's my favorite night of the month because I have the opportunity to be with an average of over 300 people that all have that same passion and bond. And I always believe you have to surround yourself with positive, like-minded people. There are too many people that get caught in this negative and other stuff. And I say I love everybody, but some people have to love from the sidelines. And so the ability to be around other people that want to do things, that have a pay-it-forward mentality. Because the other thing I believe is, I get asked a lot, Peter, you mentor a lot of people, you're around. I don't understand, why do you do that? And I believe there's enough in this world for everyone. I believe in abundance. I don't believe if I help you, I'm taking away from me. I believe if you give back to other people, that it just creates more in the universe. And so, creating and fostering that thought has helped a lot of people like Austin and a lot of the younger people, because they see that you're willing to help and show them. I've had the privilege of taking Austin to several of my projects to show him a different price point, going from the wholesaling up until, the kind of full remodels, what's available. And so for me, it's fun. I enjoy it. I love being around people. And so if you're in the Atlanta market, the first Thursday of every month, the name of the event's Real Estate Connections. People, if they need more information, they can call the number of 404-275-8087. That's 404-275-8087. They'll get to me, and I'll make sure that they have the right information.
I imagine that you've probably read 2 or 3 books that helped to change your life, maybe in real estate, business, mindset, etc. Would you mind sharing a couple with us, Peter?
So 2 of my favorite books, and one book I make everybody get that I've mentored, so Austin, I made sure he had to get this, is The 7 Levels of Communication. It's by Michael Mayer. It's absolutely one of my favorite books on networking, and it's got a pay-it-forward mentality, and kind of one of my favorite parts in it is there's actually this like a pyramid, and it goes from lowest to highest forms of communication and effectiveness, and it really helps show, if you do direct mail or you do different things, why or why not they are effective. And so I highly recommend anybody who's interested in growing their business, regardless of really what the area is, they need to read that book. Probably my second favorite book is The Go-Giver. For me, it's about the mindset and making sure that I'm in the right place, I'm helping other people. Sometimes we can get objections in different areas on how you turn that around and make sure that you're getting out of it what you want. But those are probably 2 of my favorite books that I think could help anybody, even if they're not in real estate, to grow their business.
Peter, who is the most successful real estate investor or developer, and why? This might be somebody that you know personally, publicly, dead or alive. The important aspect of the question is why it is you believe they are successful.
So that's a really interesting question. I don't know if I've got one name that I would give. And I think part of it is what I'd want people to get out of this is there's many different ways to be successful. And I think sometimes if you pigeonhole one way, you might use it because of the dollar amount they made or the number of deals. I'm not sure that really would sway me that they were the most successful. I think it's more important to be the most successful you can be and model yourself after someone whose philosophy and integrity you want to be like, because I do believe that in this world it's easy sometimes to get sidetracked, and sometimes we get challenged in doing the next right thing. And so I rather encourage people to make sure they understand why they're doing it, because we all know nobody's life goes all the way up. We all have challenges, and you have to use those challenges as an impetus to do something bigger and better. And so I'm rather challenge people to be the best that they can be versus, trying to take the success of somebody else.
If you could share the crown jewel of wisdom with your 18-year-old self, or 21, somewhere in that range, what would that be, Peter?
I would say remember that at the end of the day, always make sure you do the right thing. That will never – there are times it's harder and more difficult to do the right thing, but in the end, you have to look at yourself in the mirror and be happy with what you see. And so don't get tempted by doing shortcuts or maybe making a little extra money on a deal when you know that it's maybe you did something or that maybe you wish you hadn't or you could do differently. Continue to do the right thing. Continue to help other people. And at the end of the day, the more you give, the more the universe supports you. And besides that, the process is so much more enjoyable.
You're right about that. I know you'd mentioned a phone number, but Peter, is there anything else, any other place where people can get some more information about you or contact info that you might like to share?
My company's website is www.foundations, that's with an S, FOUNDATIONS, LLC.com. And on the website, it also has a subsection there for real estate connections. It always has the date and who the featured real estate office is. But again, it's always the first Thursday of every month from 6 to 9 o'clock.
Nice. And I encourage people to check that out if you're in the Atlanta market or wherever at in the country. Maybe you'll hop on a plane and fly there like Alston did to check it out. Peter, what a tremendously great episode. I am grateful that you took the time out of your busy schedule here to give so freely of your knowledge and information. I really appreciate you coming on the show.
I appreciate it. Thank you so much for reaching out and asking me, and I look forward to, in a couple of weeks, I guess we're going to get to meet in person. I'm looking forward to that.
As am I. Thank you for listening to this episode of the REI Diamond Show. Are you interested in receiving email notifications of future episodes of the REI Diamond Show, or interested in checking out one of our 71, 72 previous episodes of expert guests? You can do both. Either sign up at www.reidiamonds.com or subscribe through one of the podcasting apps, including iTunes, Google Play, and Stitcher, to receive new notifications of episodes as they become available, and to check out our library of expert guest interviews that have taken place over the last year. Finally, I want to thank you again for being a loyal listener of the show. Dan Breslin here, signing off. I will catch you on the next episode.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.